Is gold headed to $3,000 and what it could mean for the U.S. dollar?
Everybody's talking about it. Holy smokes.
Everybody's talking about it. Everybody's trading it.
The shiny serpent.
This gold
can't get a hold of that one.
Has been crazy, unrelenting upside that we've seen in gold. And this has been a story the last couple of years whereby in my trading history, up until the last couple of years, Glenn, gold would trade, down to 1,200 or 1,300. It would bounce back up to 1,500, 1,600, maybe challenge 1,600. It was a very mean reverting asset.
Right.
Similar to crude oil in a lot of ways. A lot of these commodities, they weren't necessarily highly correlated, and we're going to get into some correlations in just a second with the U.S. dollar and gold, which will be cool. But you would just see mean reversion. And you didn't know when it was going to happen. You didn't know from what price, but you would see the back and forth. And what we've seen the last couple of years,
Not
and
much.
We're just looking at the chart for the last year or so of trading here for gold futures, is gets to a new price, hovers around there, and then gets to another new high, hovers around there, and then gets to another new high. And right now we're in the midst of a pretty unrelenting path towards 3,000. I mean, we're just, I think, like 10 handles off of 10 to 20 as of this show, off of 3K. All-time highs for gold, but that can't even be the story. It's like saying all-time highs for like S&Ps. It's
exactly.
Like it at this point happens like 50 days out of the year.
Right, and the trend you called out, if that were to hold up, we're not there yet. We haven't established a range. If you look at the end of that chart there, all the way to the right, we really haven't seen any pullback, just slightly before, continuing on. And you might think we're crazy for this $3,000 price target that we're looking at. Can it break it? But yeah, this is the time where now everyone has a new price target. I think Bank of America just came out, said 3,500, pulling out numbers, kind of like the Bitcoin stories we always hear where people just, everyone wants to claim their own price target. But yeah, not a lot getting in the way of this gold recently. All the stories around it, a lot of things moving it, making a lot of bull cases for it. But then again, you have everyone that's saying, how much can this run? A lot of premium baked in from the actual exchanging of physical gold from wherever, London to here, U.S. gold trading at a premium. If you think that is too inflated, there's your contrarian case, but I haven't seen it yet. So
absolutely hard to make a contrarian case here because you have plenty of contrarian ideas circling this market, such as U.S. rates and U.S. dollar, both, coming off a little bit here going into the weekend and in the back half of this week here in mid-Feb, but still really strong. Like U.S. rates sustained at 4.5%.
And keeps pushing out. So
and they keep pushing out the potential cuts that you think might lift gold. So that's not doing anything against this gold market. Historically, you think a strong U.S. dollar, which again, even though it's off its highs, it is historically one of the strongest U.S. dollar markets we've seen in decades. That's not making gold any cheaper. And it's one of those things, I'm glad you brought up Bitcoin, because it's like a lot of people will go out there and every time gold makes a new high or it comes off of its high, they'll come out with a story of like, oh, well, that's because inflation.
Right.
And it's like, okay, it's an anti-inflation kind of thing where maybe it catches a bid when inflation is high, but it also gets hit when interest rates move high because theoretically people would move their money from gold, a safe haven non-interest bearing asset, to bonds,
exactly.
Safe haven interest-bearing asset, still at 4% plus interest rates. And so this is one of those things, can it get to 3K? It could get to 3K today or early next week. What is the reason behind a lot of this? Honestly, it's one of those things that we probably won't know until after the fact. It's one of those things that like everybody likes to make up the story after the Super Bowl, for example, of like, well, of course the Eagles won because they have the best defense and the defense wins. And it's like, well, leading up to that move,
leading
up to that game, it's like, you could make 50 different stories. And so right now we are kind of in the midst of gold moving higher. Hard to wrap any story around it. Recently, it's everything that you see online is like, oh, well, the unknowns around tariffs. That's why everybody's flocking to gold. And it's like, well, tariffs wasn't a thing in July of 2024. And so we've been flocking to gold for years at this point. But I do want to put some math behind it because we can at very least do that. Gold historically, Glenn, negative correlation to U.S. dollar. Because we look at gold priced in dollars. And so theoretically, a more expensive dollar could mean a cheaper gold market. No correlation across the board here, man.
No, yeah, that is bleak. Can't really look to any of these major pairs as any sort of proxy. You know, you get the historic anecdotal correlation with Australian dollar and those precious metals. You're not seeing it there. Maybe you think it's tied to these safe haven, flight to qualities. You're looking at the Swiss franc. You're looking at the Japanese yen. It's not really there.
Yeah.
And so these two, while attached to a lot of the same stories, moving at their own timings. And we're seeing both of them strong right now, but not really on the same days, or you can't attribute it to
100%. One of the only correlations that you can really see here is the slight negative 0.11 for dollar versus yen correlated to gold. And so you do see a little bit of that inverse correlation for dollar and gold in that pair. But to your point, Glenn, it's kind of like they just maybe don't go up on the same day because you look at the dollar yen chart in the same time frame, looking at the last year or so of trading, and this dollar is up over 7% in the same time that gold's up a bunch more percent. It's more volatile asset, but they're both trending in the same direction in the same time. Now, what is interesting though is, and here we look at this dollar CAD chart again, a dollar market moving up and to the right in the same time that gold is moving up and to the right. At least this US dollar is a little bit of a two-way street right now. You're seeing both sides of this US dollar trade, Glenn, whereas in gold, you're not seeing both sides. You're not seeing the correlation there. So it's hard to make a story of, okay, well, I'm going to, short gold and short dollars as a hedge. Not really a strategy that's been working out given those correlations. But if you are looking for something that is more two-sided than a gold trade here, the U.S. dollar is at least giving you that two-way street, so to speak.
And, getting more granular. You could, if you think the dollar's strong against an Asian currency like the yen long term, then you can take that position. But, yeah, you're getting good two-way action off this tariff talk as it relates to Canadian dollar. So it can get a lot more granular than just gold has to come down.
Yeah. Whereas tariffs, interest rates, inflation, and anything seems like it's a bid for gold at this point. We'll see where it reverses. Maybe it is 3K. Maybe the next price is 3,100, or what you said, Bank of America 3,500. We will stay locked in on the correlations between gold and forex in the future. But that'll do it for today's episode of Forex Focus. Thanks everybody for joining. Myself and Glenn will be back next week for more with our good friend Peter. But stay tuned